Let's look at a case study relating to interest paid by a foreign bank branch to its overseas head office and other branches. So in case of a foreign bank, what can happen is, let's say a foreign bank is in a country outside India. It may have a branch in India. And just like it has a branch in India, it may also have other branches in some third country. So there's a home country where the foreign bank is incorporated. There's India where it has a branch, and then it also has a branch in some other third country. Now this Indian branch may pay interest either to the foreign bank, which is the head office, or it may pay interest to some other branch of this foreign bank in a third country. The question which arises is, and what we are considering right now is, whether the interest paid by this branch to the foreign bank or to the third country is going to be liable to tax in India under the provisions of the Income Tax Act. Like I mentioned to you many times before, even if it is taxable under the Income Tax Act, one needs to see the relevant provisions of the treaty which India has with that country to identify if such tax is also liable under the treaty. So let's look at the question. LLM Bank Ltd carried on banking business is incorporated in Melbourne, Australia. So this foreign bank in this particular example is LLM and it is stated in Australia. It has different branches in different countries including India. During financial year 2018-19, the Indian branch of the bank paid interest of Rs 20 lakh and Rs 15 lakh respectively to its head office in Melbourne. So the branch paid 20 lakh to the head office in Melbourne and 15 lakh to the branch office in California. So California, as we know, is in US. So it paid to the head office in Australia and the branch in California. 20 lakh to them and 15 lakh to the branch. State with reasons whether the interest so paid shall be liable to tax in India in the hands of the head office and California branch. Now, like I told you, interest paid by a branch to the head office as well as interest paid by a branch to another branch of the head office is liable to tax in India. So when we talk about the legal provision, explanation to section 915 provides that interest payable by Indian PE stands for permanent establishment, of foreign bank would be deemed to accrue or arise in India if the recipient is. So if the Indian PE, if the Indian branch, a branch of a foreign bank is considered as a PE of the foreign bank, interest paid by such branch to the foreign bank will be treated as accruing or arising in India, particularly when the recipient is the head office of the bank located outside India, the permanent establishment of the bank located outside India. So the second branch that we spoke about, which was in California, will be another PE of such bank situated in California. Now, generally a branch is considered as a permanent establishment under all treaties of various countries. Therefore, you can safely assume that if there is a branch in California, it will be a permanent establishment of the bank outside India or any other branch outside India. So like I mentioned, generally even if you are not given, a branch is also considered as a PE, right? There could be other reasons. There could be agency PE, an agent might be acting as a permanent establishment, etc., which is what you need to consider. In this case, the Indian branch, being a fixed place of business, shall be treated as the PE of LLM Bank Ltd in India. So the Indian branch will be a fixed place of business and a PE of the LLM Bank. Therefore, it is covered by the provisions of section 915. Accordingly, interest of Rs 20 lakh paid by Indian branch of LLM Bank, being PE of a foreign bank, to its head office in Melbourne, head office will get covered in clause A, and 15 lakh paid to another branch office in California, which will get covered in point C, shall be deemed to accrue or arise in India. Accordingly, such interest income shall be taxable in the hands of the head office and California branch respectively, in addition to any income attributable to the PE in India. So if this PE is also earning some other income, even that is going to be taxable in India. In addition to that, this interest being interest paid by an Indian PE, which is a branch of a foreign bank, to its head office or to some other branch outside India, will be liable to tax in India. Let us move on to the next case study. As per the agreement between S Limited, a company incorporated in Korea, so there's a company S Limited which is in Korea, and Bharti Motors Limited, an Indian company. So you have Bharti Motors, which is an Indian company. S Limited rendered both offshore and onshore technical services to Bharti Motors Limited for setting up a car manufacturing plant in Gujarat. So this company was actually setting up a car manufacturing plant in Gujarat, and this entity provided onshore. What does onshore and offshore means? Offshore means that the services has been provided outside India, which is, let's say, in Korea. I'm just taking an example, it could be any other country. And onshore means that the services have actually been provided in India. So a person maybe who was providing the services was actually lying in India. S Limited rendered offshore services and onshore services at a fee of rupees 2 crores and 3 crores respectively. S Limited claims that it is not liable to tax in India in respect of fees of rupees 2 crores as it is for rendering services outside India. So for these offshore services, there is a fee of which is 2 crores which is payable. For the onshore services, there is a fee of rupees 3 crores which is payable. What they say is, okay, insofar as these onshore services are concerned, we will pay the taxes, but this amount, being the amount pertaining to services outside India, is not liable to tax in India. Now, before I move to the solution, there are two facts which one should consider here. One is that this Bharti Limited company, which is there, it is in India and the plant is set up in Gujarat. The services which have been given are in connection with the setting up of such plant. Sorry, the spelling needs A here. So basically, the services have been utilized by Bharti for the purpose of a business in India. Now, considering this fact, let us look at the legal provision. So basically, explanation to section 9(2) of the IT Act provides that interest, royalty and fee for technical services shall be deemed to accrue or arise in India to non-resident is who? S Limited, and shall be included in their total income. It shall not make any difference in tax treatment whether or not the non-resident has a residence in India or a place of business in India or a business connection in India, or whether the services have been rendered in India. Now this is what is important. So the question is, if the services fall under FTS, they will be treated as accruing or arising in India. It will not make a difference if the services have been rendered in India or rendered outside India. But they should be fee for technical services, which is condition 1. In this case, because the nature of services is FTS, therefore this condition is satisfied. The other condition, which is equally important, is that the FTS against services rendered outside India shall also be deemed to accrue or arise in India where such services are utilized for the purpose of business or profession in India, irrespective of the fact whether services are rendered outside India. Now in this case, the services have been utilized for the purpose of setting up a plant in Gujarat. Now Gujarat is in India, which means that the services are utilized for the business of Bharti in India, and therefore they will be liable to tax in India. Therefore, the stand of S Limited that such services are not liable to tax in India is not correct, and they will be liable to pay taxes on such fee for technical services in India. I hope it is clear. At the cost of repetition, 1. The services are FTS. 2. They have not been rendered in India, but they are in connection with a purpose of business or profession in India. If that be the condition, then it doesn't matter whether the services are onshore or offshore. That means whether they are rendered in India or outside India, they will still be liable to tax in India.